Me? Hello, good afternoon.
Hello, I can hear you.
Good afternoon, mate. Hey, you okay? How are you keeping?
Fine, fine. I'm very great. How are you?
I'm fine. How's weather? Here in Leeds, is there any snow?
Oh, here it's a little bit sunny in Dubai.
Oh, good. Good to hear.
Yes, yes. Mhm.
So maybe it's very good in terms of temperature now. Is it 22, 23?
Yeah, I think somewhere there
Okay,
the
good,
temperature is not bad.
good. It's a nice weather this time of the year.
Okay,
Okay.
that side is it's raining.
Yes, we had a rain
Oh,
now and it's still raining from since morning, really.
oh, is it winter? What season is it?
Winter, 1 week before, temperature was 15, dropped down to -1, went up to 10, dropped down to 2, snow. Yes, it's rapidly changed. One of
Oh,
the W we can't trust is the weather. Huh?
it's the weather.
Yes, it's always changed. Huh?
Ah, it's a problem. I guess you're always having flu and colds and all that.
Yes, that's why vitamin D less. Yes,
Uh-huh.
that's these sort of when you're a while are you born in different countries and when you're here you always face a bit problem in vitamin D and all your body not accepting the weather.
Oh, it's a problem to adopt, huh?
Yes, with the passage of time, if you travel around the world, then it's fine. Always, at least once a year.
Oh, okay. Okay.
Brilliant. Thanks for joining. Blessful is welcome. Thanks for joining. Blessful start. Anyone, any question before starting, please?
Um, yes, on the questions that you sent us last week, huh?
Yeah.
Yes, I was looking at there's the company Converia Limited.
Yes.
Yes, I could see that the solution that was there. I'm not so sure how it was calculated when they returned earnings. It's showing on the solution 659,
Mm-hmm.
but on the trial balance is 549, unless if I didn't add something properly.
Okay, no problem. I'll go through and I'll explain you properly.
Okay, all right.
Yeah. So that then I'll. Okay.
Okay,
Thanks for highlighting, but I'll go through and it should be some way adjustment.
okay, all right. Thank you.
Welcome. Okay, thanks for joining. Let's we'll start. I'm not sure they will join us because some people listening recording. Thanks for joining. And this week, please. Last week we lesson one we discussed more about standard. Lesson two we discussed about financial statement. Lesson three prepare the financial statement for group of entities, consolidated statement, parent, subsidiary, associate element when we're doing so we can meet this criteria. Okay, so please, I'll send you the separate handout. I'll share with you, which is called Consolidated Financial Statement with the question and answer. So if you want to embed example when we'll do assignment, so that's absolutely fine. So we can pick example from various source, no problem to meet the criteria. Okay, so we had a discussion about IES 1, International Accounting Standard 1. We prepare major four types of financial statements: statement of comprehensive income, statement of financial position, statement of cash flow, and statement of change in equity. Financial statement should be true and fair. And IS2 inventories, which is about an inventory should be recorded at cost or net realizable value, whichever is the lower. We always try to record the inventory and inventory evaluation method, first in, first out, and FCO average, cost. That's we normally use, and last in, first out, we're not using anymore in financial accounting, but in management accounting, that's absolutely fine. So, parent company, when you own more than 50% shares of your other company, that will be your subsidiary company. because you have a control, you can change the board of governance, you can make one consolidated statement, and you have a significant influence. Okay, so associate, that's, when you own the shares 20 to 49%, still you have an influence. Less than 20%, that's a simple investment, so we not really combine their assets. So that's, the element which we look, today lesson is indicative content, what we're supposed to look around, be able to prepare the financial statement of group of entities. Will go through all different types of statements, and those, will be R. So as we discussed, in the previous lessons, we discussed about IS1, IS2, IS10, which is about events, adjusting event, IS16, property plant equipment, goodwill adjustment, provision of assets or liabilities, and then of course, we can look on impairment. Okay, so ethics is we discuss about 5 codes of ethics. Popular people, to remember easily, we can say popular people chat enough. Some people are very famous, so remember the word popular people chat in office. So first P is a professional behavior, second P is a professionally competence and due care, confidentiality, integrity, and objectivity. That's, these are the ethics. So we had a discussion about and intra-company trading. Always we need to be eliminate to be, because otherwise maybe we are saying sales but we're selling within the group. That's, and sometimes creative account, and always, playing the things, those areas, of course, new standards, we have to balance the things accordingly. Okay, so prepare the group accounts, including the statement of the cash flow. Statement of the cash flow, we can look around the cash in and out. We look around different activities like operating, financing, and investing the cash in and out from the business, and we prepare those statements, and we can so whichever method you use, IS7, which is a law about the financial statement, about the cash flow statement, specific, either you use indirect method or direct method. Invest, first, operating activities mean your major business is your normal business, day in and out you do the business. Like when we think, we have the company called Tesco, which is the supermarket and their consumer goods. But the Tesco also have, whenever they have a spare cash, they invest in various non-current assets, like such as property, plant, equipment, and various, and they buy and sell as well. So that's the investing activities. Financing activities, when we can borrow money or we can pay off money, so money cash in and out under the financing. So it can be debt financing, equity financing, the change in the last year, non-current liabilities, and the equity figures. So that's, which we can find inflow and outflow of the cash, by looking the balance sheet of the last year, this year. So that's the way we can, and of course when you combine. So always we start, when we preparing the cash flow, profit before tax, then of course you can add, the finance cost. Finance cost is mean when you're borrowing money. Depreciation is a non-cash expense. Dividend received is an investing activity. That's why we have to minus from operating activities first place, because the profit before tax, that was, included the dividend. Now we are minus to make adjustment because we put under the correct heading. Gain, the loss and the disposal of the property, plant, equipment. What's happened is the loss or the gain we have in the property according to the book value, carrying value, and that's, which we look in. Increase or decrease in inventory last year, this year. So because if the inventory increase, it means the cash is tidy up. If inventory decrease, it means the cash is coming in. Yeah, so it can impact, so we can look around decrease, increase the trade receivable. When the trade receivable going up, which means cash is tidy up. When the trade receivable going down, it means cash coming in. And increase or decrease of the payable, if the trade payable are we call creditors. So those we need to be look around in adjustment purposes, and the cash generated by operation, interest paid, and the tax paid, that we need to be do, and we include, activities in, and in our assignment, of course, we can pick any example. So purchase of the property, plant, equipment, proceed of disposal, interest received, dividend received. That's, the process from the issuing share, increase in the bank loan or the dividend paid, all, the net cash flow in operating, financing, investing, and the beginning year balance. And because when you do all the reconciliation, the end of the year balance, it should be equal to your in balance sheet, your cash figures. That should be, it's basically the reconciliation of the cash flow, where in and out of the cash flow. So we can look around the cash generated from operation, interest and taxes, investing, financing, and that's the activities we need to be look around in term of. So please, if you have any question, always ask, which will go through. And some numerical, please, you can look around, and then of course, I'll include it some reference, and we can look around the question and answers. And if any uh, problem with the figure, then we can go through accordingly. So we can look around the advantages and the limitation. Of course, cash flow can alert the user of the liquidity problem, because maybe the business is wonderful, the turnover increasing. What about the turnover mean? It can be credit sale. It's not always the cash sale. Sales are two, either the cash sales or the credit sales. Buy now and pay in 5 years. Never know 5 years economic situation and the bad debts, and of course, and we saying the business is. So that's why, for the investor point of view, for the company, the cash is the lifeblood for any business. So we have to think about limitation. The cash balances can be manipulated by delaying the payment, and that's show good the cash position, because end of the year when we're preparing. So these are all the techniques to look healthy, our business, and that's we need to be. So please, I gave you and send you last lesson Osborne, which is the handout, please. It's called Chapter Activities and Answers. So you can look around chapter 6, 6.3, and 6.4. You've been given the question and answers. So please, you can, and that will help you, because when we do assignment, we can pick some examples, we can include, and we can underneath a little bit explain them. Like, the cash flow have three activities, what those are, operating activity, which is normal business day in and out. In this case, we'll say the net operating cash is this, and so on. Or if any key item you want to explain, we can, those will go through when we do assignment discussion. Yes, please. Anyone, any question here, if you like to ask, please. Okay. Then please, we have 3.2, prepare the group accounts of incorporated, associate, and the joint arrangement. We said parent, when you own the 50% shares of other company, your parent, other will be the subsidiary, and their the purchase consideration, non-controlling interest, post acquisition. So all we have a concern, the post acquisition figures, not pre-acquisition figures. So when we acquire, so we can combine the company's asset, and because the parent and subsidiary, that's we need to be look around, and that's it's quite crucial. And investor control, investor, yes, investees, when investor is exposed of the right and the various return and the power, that's is also we need to be look around in that perspective. Always good to be draw the group structure, how much is the parent, how much is the subsidiary or associate, so we can, if any question will include, that will meet our criteria for this learning outcome. And that's, it's quite crucial, which we can. And of course, when we'll go through the task according to assignment, at that point, I can recommend you which question is or which, and I included some examples here for you as well. So step one, establish the group structure, like how many percent share of the subsidiary own it, so we can find it. If you own it, parent P Limited own 80% shares of S Limited. So P is a parent, S is subsidiary, and 80% and 20% is non-controlling interest. So please, when we look the calculate the non-controlling interest, the share capital of S, which is a subsidiary, at acquisition times by how much was that, 20% is the non-controlling, 80% is control. Return earning, please, we need to be acquisition 20%. Fair value adjustment, please, we have to do fair value, the value of the asset is being increased or decreased, so we need to make adjustment within. So that is 20%, we have a concern, and this way we can calculate the non-controlling interest at acquisition. Goodwill, of course, goodwill is we never include the internally goodwill generated, because it's very difficult. If we can measure reliably, then we can include as an asset, because the goodwill is an asset for the company. And goodwill can be impairment. can be, so that's we impairment is the loss. So consideration, how much is the purchase consideration? Because always look at the net asset of the company. Net asset is asset minus liability equal to net asset, and the net asset always equal to equity figures. So we have to think about the consideration, non-controlling interest as we done in the step two, and then net asset acquired how much, and the impairment of the goodwill. So please, the difference between the money being paid and the net value of the asset, why you paid more than the net asset value, that's why you paid the goodwill for the company. Okay? So that's the way we can, of course, we'll go through the question and we look within those, and we can include the example to meet the criteria. Okay, calculate the consolidated retained earnings. So please, when you calculate all the parent, pre and post acquisition, doesn't matter the pre and post, but the subsidiary, please post acquisition, less at acquisition, how much was that? And we can look around, because that's we need to be minus, and because we have a concern with the post acquisition income, not pre acquisition. So that's and the group shares we can, that's and then if any impairment, so we can minus. Okay, calculate the non-controlling interest at the year end. So share capital at year end of subsidiary, which is 20%, return earning, and the fair value adjustment and non-controlling interest. That if we can, and then please we can, and then we can prepare our financial position based on, so you have the asset, then of course intangible assets, which is mean goodwill, we calculated in, and other non-current asset P plus subsidiary is 100%, and the current asset P plus subsidiary is 100%, like trade receivable, inventory. So we combining the asset. The share capital, only parent and subsidiary is return earning, please. That's parent all, and the subsidiary is the post acquisition figures, and the non-controlling interest, and then will be, because already, because the total asset should be equal to total asset minus liability, the net asset should be equal to equity figures. So net asset, if it means your equity figures, that can be balance sheet. So that's which we discuss about. Always please, intra-company trading, always eliminate, because if I'm selling 20% above, then the cost I'm making profit, and not the markup and the margin. That's we also need to be keep in mind. And then please, that's because when we are part of the group, we need to be eliminate. When individually, then it's fine, your individual statement as a subsidiary, as a parent separately, then it's fine. But when you're doing the group, the people and the group's financial statement, then of course we have to eliminate, and the non-controlling interest. So that's so you will see the revenue, parent plus subsidiary minus intra-company trading. The cost of sales, please, the parent, subsidiary, any unrealized profit, the profit we earn between the group, the gross profit, operating expenses, profit from operations, finance cost, parent plus subsidiaries, profit before tax, and the tax parent plus subsidiaries, and then profit for the period continued. Attribute, because the parent is and the subsidiaries, so then non-controlling interest element, which is 20% of that. So we can take the 20% non-controlling interest, and then 80 is we have in the group. That's an intra-company. We make the adjustment, and we can do the double entry bookkeeping. So one debit and one credit, because the first place you done it as an income. So these are the key points we need to be keep in mind. And please, in our handout, which is Osmond handouts, please, the chapter activities and the chapter answers. So you have the question 8.4 and 8.5. You can look around, and that's which we can. So that I'll show you. Okay, so prepare the group of account that involve the really changes within the group and the group structure. So that's which we need to be look around, and those we need to be solved. And if the company own the more than 50% shares, that will be a subsidiary, as we discussed, parent subsidiary, AS-27, which is consolidatory, and the separate financial statement use, subsidiaries, control, and their non-controlling interest and combining asset, as we discussed in the previous section, the 3.2, and thus we need to be include the basic principle, please. We need to be make sure we intra-company trading always eliminate, always try to be look around the non-controlling interest, look around the group structure diagram, and please, those we can highlight it. And I included the link for you for the group structure activities. And please, 8.6, which is quite good from the Osborne handout. I included for you open tuition handout. If you want to look around, please. We said in the previous lesson, open tuition F7 exam of ACCA, which is relevant to this subject with whatever we're doing at the corporate reporting. So that's, we need to. And if you want to, please go through the group, and you want to watch, all the lectures in detail and activities, you can. I just want to do the practice we can as well. Kaplan, please. Kaplan book, which I already shared with you, ACCA Kaplan F7. So you can pick examples from those as well. Yes, those are quite. Please, if we want to work toward the merit criteria, so accounting requirement related to the foreign transaction entities, of course, you have to think about who is controlled by the board of governance, where is it, the company is based on, is it subsidiaries and their profit and the taxes, and that's, we need to be look around. If anything examples, you're adding it, so that's, due to the increasing the global nature of the investment, the business operation, of course, we follow IES, International Accounting Standard. Why we have to harmonize system? One, standardize, and people, those have the accounting knowledge, they better understand, and we have the harmonized system in place. Yes. So legal structure, IFRS is are not enforceable in any country. They are developed, by an international organization. That's no international authority to become enforceable. They must be adopted by the country at the national financial reporting standards set or all these. But if we are publishing and we have investors around the world, then is the better to be harmonized system, international financial reporting standard. And there are a couple of examples. If you want any particular country standard, you can, please. And we included a link, and that's, which we can further reading. 3 point, which is D. D is mean destination criteria. Always your intention, what grade you're looking for. Always low M is the crime, fail in life, no crime will try to be toward the distinction criteria will work. Evaluate the needs and prepare the detailed, the financial statement with changes in the group structure. If new company, the fair value adjustment, if you're showing adjustment, you're showing some working, so we're hitting that criteria. So it means we may be done the basic question in 3.2 and 3.3, and then you did a lot of, adjustment. Maybe you have two subsidiaries elements, then it means we are looking and meeting the criteria of distinction. So please, we can look around the fair value adjustment. So what is meant by fair value? So please, the fair value and the market value, how much is the value of the asset at the date of acquisition? The goodwill calculation is based on the fair value of the subsidiaries, identified net asset at the acquisition date, as we said, net asset, and how much we are paying. For this purchase consideration, the difference between is called the, and the fair value we need to be adjusted. And please, I included the link for you. Is really is ACCA article for further reading, and and then we have the books here. So quickly show you, please. We said 3.1, which said chapter 6, 6.3, and 6.4. I quickly show you, and these are available Moodle page as well, and it's been cross-referenced, and I'll share with you the consolidated handout on our WhatsApp group. So please, if you want to look around for this week, so you can. Okay, so this is please, and the handout is available. So what you can, which normally we use for AAT, and we said go back to the chapter 6, and we said 6.3. Yes, so go 6.3. Yes, so this is the 6.3, So you've been given the question here. You will see the profit and loss of the company, and then please you will see we've been given the balance sheet of two companies for the cash flows, and we've been given the adjustments, yeah, and prepare the consolidated, yes, and operating, financing, and investing activities with all adjustments and the changes. And when we'll go back to look around in 6.3 answers and go to, yeah. So if you look 6.3 here, so profit before tax, you will see the figures which we pick from the profit and loss account, and you will see the depreciation we added back. First place we minus dividend because that goes under investing activities with all adjustment, and you will see the net cash flow from uh, operating activities. That's, we have the positive figures, and then you will go the cash flow from investing activities. So because it's a continuity, so that figures we put it here, the net cash flow from. Then we went to the dividend received is the income for it being the money in, and the property plant equipment we proceed, we sold it. So that's we made the profit, that's the cash in, and purchase of the asset in the last year, this year's figures of the non-current asset went up, which means we purchased more assets. And that's, we put the figures and the net cash, so we have the negative, the cash went out from the system. And then please the bank loan, we raised 250 million thousand. So please always look the figures and the proceed of the shares. We issued shares, the cash in, and the dividend we paid. Uh, that's the money went out, and the net cash from financing activity, which is positive. So we have the operating is positive, investing is negative, so we minus that, and then we have financing is positive because the cash came in. And if you take the difference between all these three, it's positive plus positive minus negative. So overall, we have the net cash flow is went out is a negative. We have the opening balance given at the in the balance sheet. We add it, and then the net we have overdraft figures of 1407. So what you can do if you look within that question, please 3 point. So that's you look the balance sheet and look around the bank overdraft. That's 107. That's match with it because our negative cash flow. So it is we reconcile the cash, and this is the cash flow question. Yes, please. In the same way, if you want to look around chapter 8, we said 8.3 are, yeah. So what you can do, please, you can go, yeah, and this chapter 8 is about the consolidated. So look around the consolidated financial statement, and we can pick, we said 8.4. You will see the 8.4 with some adjustment, and the consolidated profit and loss, consolidated financial position when you're doing 8.5 is also relevant question, and with lot of adjustments, and 8.6. So when you're doing, please, that's you meeting the criteria. If you want extension, more working on it, more adjustment, and that's the way we can do and solve these. Okay, any question from anyone? Okay, so that's all from my end, and please, if you like to ask any question, very welcome.
Oh, hi, Anjum. Hi.
Hi, welcome.
Hi, yeah. I took the class last time as well, but I have to go to back home urgently, so I couldn't, submit the assignment.
Sorry, that's fine. Which assignment we talking about? This one?
Yeah.
Okay, no problem. If you need help, so we can arrange one-to-one. If you want to attend all the lessons, you can, and then you can submit as you want.
Okay.
Hi, Anjum. I got a similar question to Shalik actually. Can you hear me?
Yes, I can hear you. Thanks.
Hi. I've done this course before, but then I prepared the assignment, then I just gone to the back burner. I haven't basically done it. But I've got assignment all prepared, which I need some guidance if I can share with you before doing the final submissions to just to check actually because there are a few areas what I've tried to do is I try to do the real life companies examples. One of the company where I was working with, comparing with the sector, the other sector published accounts from the company house. So I try to do it in that way, doing the consolidated bank state, consolidated group accounts and stuff. Um, so I prepared this one, but I just want to review. Is this something you can assist me on that,
Yes,
please?
sure. If you don't mind to send me, and during week I'll go through and give you feedback, and if any, we can add it more examples. So
Okay.
Anjum at ukversity.co.uk, you can drop me email and I'll go.
Sorry, Anjum, ANJUM.
Yes, it is at ukversity.co.uk. Yes, which I just type in the chat box.
Okay, let me check the chat box. Because I always did the exam formats and things like that. So it's first time doing the assignments. I'm not really good in that, so I really need some help. If you,
No, no, very well. No. So
that's
really,
great.
it's just a matter of assignment. So this is assignment based course. So
Yeah, no, no, I
right,
understand. Completely
so
understand.
we may be doing less, the question, but it's good to be for the sake of your own understanding. We can, and that's my email.
Yeah, no, sure, sir. I'll go your email address
Okay,
now.
brilliant. So
Um,
if you want, what I'll do, I'll share with you the consolidated statement, handout on the WhatsApp group, and so
okay.
you can look around if you want to. Yes, I already refer you chapter 8 now. Yes, which is that's also absolutely fine. If you use any other example, that's also absolutely fine, no issue, because there are no hard and fast rule. Is only the meeting the criteria. That's the main thing.
Yeah, no, I try to. I thought I'll try to do some. So I've gone through the company house, get the, but it's very complicated. You know, when if it's like
Yes,
a,
if in that case, the better to be pick the example from, just rewrite it slightly in your own, because if you copy as it is, it can be a problem because it's come similarities. So just a little bit, put in the slightly in your own layout, yes, and then combine them and produce the statement. Already you've been given the answer, really, put in the order, yes. Underneath,
yeah,
little bit in explain, link with the standard. That's absolutely fine. That meet the criteria.
okay, great.
A few adjustments.
On them, just one question. I can't find the, like assignment in the module.
Which one is the sample
No, but I just want to know where the assignment is.
assignment brief or assignment sample assignment we talked
No,
about?
no, no. The is the sample assignment already in the system or?
Yes, it should be on our Moodle page. If you go on the Moodle, you will find the sample assignment. Huh? Otherwise, I can share with you on the WhatsApp group. Huh?
Okay. No, I mean you can share the sample, but I want the normal one assignment for this course.
Oh, assignment brief you meant by, yeah?
Yeah, because like last time I have to go back home, so I couldn't attend the. So,
Okay.
I mean I didn't do that one. So is it possible to get the assignment?
Yes. So first thing, if does you have the unit specification which is available on Moodle page, yeah?
Yeah.
And second, it's called assignment. Should be, sorry, I'm not sure if I have the chair in the Moodle page. Yes, so this is assignment brief. Yes, I'll share with you as well on the WhatsApp group, which is available on our Moodle page. Yeah. So underneath
Okay.
you will see, we done the lesson one. So this is assessment criteria relevant to lesson one. This is lesson two, LO2. Yeah, this task. And then if you look here, task two is lesson three. Yeah, 3.1, 3.2, 3.3, and the merit criteria, distinction criteria, and then lesson task three is based on the lesson four, which we'll go through next week, ratios and things. Huh? So that's the way. And then, of course, you're answering these tasks and embedding the examples accordingly. You meet the criteria. And you've been given here guidance as well. Huh? Can you see here? Yes, that's, also help you. Okay. And we discuss about standards and things. So plus we have the sample assignment. It should be on our Moodle page. You can follow and I'll share with you as well if you want. So that's also
The challenge doing the assignment is basically the questions, where to pick these questions from, sort of thing. Because one of the when I was doing the assignment, there was one thing like talking about the, the consolidated accounts on the foreign exchange and stuff, but there's no example being. I can't see any question actually referring to
yes.
the
So like if it's the subsidiary and the parent in different countries, yeah. So exchange rate, of course, that's a matter of merging them according to that date. Sometimes it can be at real life, it can be quite hectic, the exchange rate always changing. Yeah? So which rate you can combine them into in one currency. Yeah. That's but it's no problem as long you adding the example because it's not actual exam, it's the meeting the criteria. So that
if we can ignore the foreign exchange, will that accept?
yeah, that's fine, no problem because
That's
the
fine.
exchange is there. We doing in one currency, it's fine. Yeah, that meet the criteria.
Okay, great.
So yes, please, you will see here is I'll share with you this assignment. Yeah. Okay. So you can look around the example. You can pick different example. You can include it instead of the exactly the same examples. Yeah. So I'll share with you this sample as well.
Okay.
Okay. So that's all from my end. Anyone, any other question, please? If you like to ask?
So I've emailed it to you. I'll be eagerly waiting for the feedback. It was based on the first assignment when there was, and then after that, like I think it's about last 6 7 months ago that they've made some changes on those
No
assignments.
problem. That's fine because you enrolled before, and that's we can.
Okay, great. Thanks. It just because of personal commitment, I'd run it and then I just didn't actually
No
submit
problem.
it.
That's fine. I'll go through and I'll reply in accordingly.
Thank you, sir.
Hello, sir. Hi. Yeah.
Yes.
So the new assignment available in the module at the moment?
Yes, should be on the our Moodle page because I think so. You IFA direct, the Moodle is you have the access there. If you go on
Yeah,
into the unit,
I couldn't find it.
okay. Maybe some issues, and I'll check, from admin tomorrow morning, and I'll reply you. Okay.
I went
Other-
there and the course it's not there.
Yes, they transfer me on new mood. Because old VLE, which is virtual learning environment, we call Moodle, and the new one is some data maybe not being transferred properly. Yes.
Yeah, there is a assignment discussion L7 unit 1. I mean there is a videos. Yeah,
Yes, LO1, LO2,
yeah,
LO3
hello,
are
yeah.
recording, and then of course, we can look around assignment brief, and what I'll do, I'll ask, updated version of they uploaded should be there.
Uh, is it possible for you to send the assignment via the email?
Yes, no problem. I'll send you via WhatsApp group. If you want email, I can send you email.
Yeah, I will. I'm gonna send the.
I think we should do it by WhatsApp group. The other people will get benefit as well. So,
Yes, so that's why I'm just sharing on the WhatsApp group more than email each individual. So everyone have access. Huh?
Yeah.
and where are you based at the moment?
I based in Leeds,
Oh,
Derby.
okay. I'm traveling Monday, hopefully around that direction.
Oh, very welcome. I'm teaching Manchester Monday. I do
Okay,
work, for one of university there.
okay, great. No, I
So
do travel
where
a
where
lot
where,
with my
where
career.
you based? You based in
I'm based in Hampshire,
oh,
near Southampton.
okay, other side. How's weather
Yeah.
there?
It's all right. It was just drizzling all the way along, sort of thing. Yeah, yes. You know that you started the conversation with the one W. You can't trust it, and quite. I was laughing at the back, but it's
Very
it's what.
welcome. I'll tomorrow I'll finish quite late. Uh,
Yeah.
I'll finish around 8 o'clock.
Yeah.
Whole day,
No, no, that's fine. It's no. Look,
Definitely, I'll will
yeah,
go
no, no, no,
to
that's
coffee
fine. I think
together.
we can just
No problem.
just just a give a view on the assignment
No,
and
no,
give you feedback.
definitely. Very welcome. Of course. So I'll
Very
go
happy.
through. So yes. So you already sent me email, and I'll go through and I'll reply you by
Thank you, sir.
this
Thank you.
afternoon later.
Thank you.
1 second. 1 second. So my email, I'm gonna send my email here, sir. Yeah.
Yeah. So it's fine. It's small letters, please. anjum@ukversity.co.uk. Yeah? Okay.
This is my email.
Okay. Brilliant. That's fine. Thanks for sharing, and
Yeah.
I'll send you as well.
All right. Okay. Thank you.
Thank
Thank
you.
you.
Thank you so much. Thank you.
Thank you. Have a lovely weekend. Enjoy
Yeah,
your
you too.
rest here, and
Bye.
speak to you. Thank you.
Thank you.
Bye-bye. Thanks. Bye bye.
Bye bye.
Blessing. Enjoy weather there as well. Huh?
Thank you. Thank you.
Sorry?
Enjoy weather as well in Dubai. Huh?
Yes, I'm actually enjoying this side.
Okay. Brilliant. Okay.
All
See you.
right.
Thanks. Bye bye.
All right, thank you. All right.